Welcome back to Investing Talk podcast. Today we're focusing on Nvni Group. This is a Latin American B2B SaaS consolidator that's really caught a lot of attention recently.
Oh, definitely. Especially from anyone watching high volatility stocks.
Exactly. I mean, the price movements have been just
Yeah.
dramatic. A real roller coaster, from over $12 down to pennies,
Mm-hmm.
and now it's surging again.
Wild swings. So the core question really, and what we want to explore here is Nvni Group actually a good buy right now?
And before we jump into all of that, just a quick reminder, please subscribe, like, and comment on this discussion. We'd love to hear from you.
Yeah, and if there's a company you want us to look at next time, definitely leave it in the comments.
Okay, so let's try and unpack this because it's complicated, right? Nvni Group feels like that classic high-risk scenario.
Potentially high reward, though. That's the lure.
Absolutely, like potentially 1,000% reward scenario.
Mm-hmm.
But we have to figure out this cocktail of operational wins, maybe some extreme speculation, and, frankly, a lack of financial clarity that seems to be driving this volatility.
Right. Need to weigh the good stuff, the recent changes, against those, fundamental worries that the losses just keep coming and the price swings.
Yeah, those massive swings we've seen just in the last year alone.
Well, the recent momentum, it didn't actually start with earnings or anything flashy like that. It began with something quieter, but really crucial structurally. Stability.
Okay, stability how?
Well, back in August 2025, they had this really important compliance milestone. Nvni Group managed to meet the Nasdaq requirement for a $35 million minimum market value of listed securities.
The MVLS requirement.
Exactly. And they didn't just touch it and fall back. They held it for 10 straight days.
Okay, that is significant.
It's incredibly tangible
Mhm.
because it just takes away the significant near-term regulatory risk, the delisting threat. Gone. That had been hanging over the stock for months.
Right, a huge cloud lifted. And it seems like they immediately used that stability, maybe that breathing room, to focus internally on execution.
Looks like it. In September 2025, you saw the promotion of Gustavo Lucero to Chief Operating Officer.
And that wasn't just like moving names around on an org chart.
No, the company was pretty explicit. This move is tied directly to improving operational excellence, and this is key for a tech company, integrating AI-driven process improvements.
Okay, AI improvements. For a SaaS consolidator, what does that actually mean on the ground?
It means trying to unify all those different systems from the companies they bought, right? Automating things like lead generation, maybe standardizing billing, making client onboarding smoother across the board.
Gotcha. So basically making the consolidation part actually work efficiently.
Precisely. Because in this roll-up game, which is what Nvni Group is doing, the whole idea only works if you actually get those synergies efficiently. Lucera's job is basically to make sure the mergers work in practice, not just on paper.
And hopefully lead to better margins down the road. The AI is supposed to speed that up, I guess.
That's the plan. And, that operational focus seems to be getting noticed maybe more by traders at first than long-term folks.
How so?
Well, in August, right after that compliance news and the CO announcement, we saw short interest drop by 25.1%.
Wow, 25%. That's a massive decline in short interest.
It's huge. It suggests either, maybe some short sellers are changing their minds, or probably more likely a big wave of short covering. People getting squeezed out by that Nasdaq news.
Yeah, a short squeeze can definitely give a stock a big upward kick. But, that kind of rally, it doesn't last on its own, does it? What's the underlying story they're selling now?
Well, that brings us back to their main strategy, right? Their core growth plan.
Which is?
They are a pure-play SaaS consolidator focused completely on Latin America. And they just finished integrating some newly acquired SaaS companies. Mundi was a notable one.
Indeed. Okay. And what does that bring to the table?
Well, contextually, it seems Mundi really boosts their B2B cloud offerings, maybe in a specific area like finance or perhaps logistics. Point is, it adds scale and helps create those portfolio synergies they need across the region.
So they're definitely pushing ahead with that roll-up model. Aggressively.
Yes, executing the roll-up part, buying companies. But this is where we run smack into that core financial paradox, the thing that really defines the risk here.
Okay, the paradox. Lay it out for us.
So you look at the snapshot. They have real revenue, right? Trailing 12 months, about $31.25 million. That suggests they are getting traction in LATAM.
Right, that's not insignificant revenue.
However, and this is the big however, they're operating at a pretty substantial net loss. We're talking $13.93 million TTM.
Oof. Almost $14 million loss on $31 million revenue.
Yeah. which gives you negative earnings per share, about $0.46, no PE ratio, obviously. And this split, this revenue growth alongside these deep ongoing losses, that's what's really fueling the crazy volatility.
It absolutely explains the ride. I mean, that $12.19 high versus the, 14 cents low within a year, that's not just volatility. That's, yeah, a financial roller coaster is the right term.
Totally. And the price now hovering around 30.63 cents as of September.
Yeah, but if you're thinking of buying here, you have to understand that this price action is almost entirely driven by speculation, by liquidity shifts, right?
Yeah.
Not really solid fundamentals at this point.
Exactly. But let's pause on that paradox for a second. Because investors who do buy into this model, the Latam sauce roll-up, they're often okay with tolerating those $14 million losses, at least for a while.
Why? What's the thinking there?
Well, they're essentially paying a premium for the future. For the hope of synergy, for successful integration on the line, the market's kind of pricing in this belief that, yeah, you also and the team will eventually unify these acquisitions and stop the bleeding, stop the cash burn.
So it's a bet on future execution paying off big time.
That belief, that hope, is what leads to these really outlier analyst targets. And here's where it gets, really interesting. Despite all this risk, all this volatility, there's only one Wall Street analyst actually covering Nvni Group right now. Just one.
Only one. Okay, that's thin coverage.
Very thin. But they assigned a buy rating. And get this, a highly speculative 12-month price target of $7.
$7 from 63 cents. That's...
Yeah, over 1,000% potential upside from where it is now. It's just an astronomical bet that this roll-up strategy pays off, and pays off dramatically.
Wow, okay. If I'm a listener and I see that $7 target, that massive potential upside, what's the single biggest question I should be asking? Especially with that upcoming investor call on September 30th. Transparency.
Yeah.
It all comes down to transparency, because that raises the huge question, what don't we know?
Right. That kind of target, $7, it demands extreme caution, because the kind of deep dive fundamental analysis we'd normally want for a company this wild is just, it's constrained. There's limited financial disclosure.
So, like, what specifically is missing?
Well, verifiable data. On their current cash position, for instance. What's the exact debt load look like? What are the latest cash flow trends? That stuff just isn't readily available in public sources right now.
And when you're losing nearly $14 million a year.
Exactly. When you're burning cash like that, having limited financial visibility is incredibly dangerous. If the losses keep going and maybe getting capital becomes harder, then the risk of dilution, it becomes huge.
So dilution meaning they issue a ton of new shares to raise cash, which tanks the price for existing shareholders.
Precisely. That becomes a major immediate concern.
So it feels like the whole investment case, or maybe the whole trade case, really hinges on what they reveal next, especially on September 30th.
Absolutely. Which brings us to the upcoming catalysts, because the next few months are just packed with things that could really move this stock.
Okay, let's run through those.
Right. The most immediate, the most critical event is September 30th, 2025. That's pre-market. They're releasing their first half 2025 financials, and they're doing an investor webinar.
And the CEO is speaking.
Yeah, CEO Pierre Sherman is scheduled to talk about the outlook for the rest of fiscal 25. Given everything we just said about transparency, this webinar has to deliver clarity on cash burn, on synergy progress. If it doesn't, the price could really suffer.
So that event is going to set the tone for Q4 sentiment. Big time.
Absolutely. And then beyond that crucial date, there are other things traders will be watching, just market mechanics stuff.
Like what?
Well, October 21st is flagged as a potential institutional buying window, maybe a time when some funds might dip a toe in, establish small positions.
Okay.
Then November 8th, there's a major ETF rebalancing period. That could trigger some buying or selling if the stock gets included or kicked out of any minor indices.
Right, passive flows.
And then looking further out, the scheduled Q3 2025 earnings announcement is apparently set for December 10th. So another data point later in the year.
And layered on top of that official schedule, you've got the market chatter, right? The rumors that fuel speculation.
Oh, yeah. Those are definitely swirling. We've seen these persistent rumors about, like, a major AI or cloud platform partnership, maybe with a big Brazilian tech firm.
Which would be huge validation if true.
Instantly validate their tech and regional presence, yeah. There's also speculation they might announce, one or two more SaaS acquisitions before the year ends. Keep feeding that roll-up narrative.
More growth fuel.
Right. And plus, there's this anticipation, maybe hope, that they could get included in some minor LITAM or tech-focused ETF, especially after hitting that Nasdaq compliance mark back in August.
So a lot potentially driving eyeballs and maybe volume. How does the technical picture look amidst all this?
Well, the technicals really tell that mixed story perfectly. It kind of reflects that conflict between the short-term traders and maybe the wary long-term view.
How so?
Short-term momentum is pretty decisively bullish right now. If you look at the moving averages, the 10-day, 20-day, 50-day, they're all signaling buy. And the MACD indicator is positive too, suggesting prices have been accelerating recently.
Okay, so if you're a day trader, maybe looking for a quick pop-around news, the chart looks green for now.
For now, yeah. But what about the structural health? The longer-term trend?
That's a question.
Structurally, it's still weak. The MA200, the 200-day moving average, that's the line most long-term investors watch to gauge the real health of the stock, it's sitting way up at $1.13.
And the stock's at 63 cents now.
Right. So trading far below that signals a sell from a long-term trend perspective. And another point, the stock is technically overbought right now. The RSI, the Relative Strength Index, is up at 73.4.
And over 70 on the RSI usually suggests.
The stock might be due for a short-term pullback. It's gotten ahead of itself, maybe. So, yeah, the recent burst has been strong, but that underlying weakness from the huge drop over the past year, it's still very much there on the charts.
Okay, so pulling this all together,
Yeah.
connecting it back to the big picture, the risks here seem substantial.
They are, and we need to be super clear about them. First off, high execution risk. Just integrating all these acquired businesses successfully, it's incredibly complex.
Yeah, roll-ups are notorious for integration headaches, merging cultures, software, accounting. It always seems to take longer and cost more than planned.
Almost always. But isn't that the whole point? Isn't the roll-up model why people get interested in these LATAM SaaS plays in the first place? They're betting Nvni can navigate that complexity, grab market share, despite the challenges.
True, that's the bull case bet. They are making that bet. But that bet relies heavily on them solving the second major risk, those ongoing net losses, with, as we said, no clear, publicly visible path to actually getting profitable. That $14 million annual loss, it's a constant drain. And they're not operating in a vacuum either, not at all. Third risk, the SaaS landscape in Latin America is intensely competitive. You've got huge global players moving in, plus strong, well-funded local companies all fighting for the same customers. And then on top of all that, you have the external stuff, the things management just can't control.
Exactly, the macroeconomic risks.
Yeah.
Just inherent to operating in that region, currency swings, inflation spikes, maybe sudden regulatory changes. These can blow up growth forecasts instantly.
Yeah, you definitely have to factor in those regional risks, especially when a stock might not have deep liquidity.
For sure. So, okay, given all these pieces, the recent wins, the crazy volatility, that one super bullish analyst target, but also the huge financial question marks, what's the overall take? What's the investment rating based on the analysis we have?
They're going down.
The overall assessment comes out as a rating of 3 out of 10.
Wow, a 3 out of 10. That's pretty severe,
Yeah.
especially with that potential 1,000% upside the analyst sees. Isn't there any scenario where maybe the recent positive momentum, the Nasdaq compliance, the new COO, that short covering justifies maybe a small speculative bet? Well, that is the high-risk gamble someone might take. But the rationale for the 310 rating is pretty clear.
Yeah.
That severe drawdown we saw, from over $12 down below $1, that's brutal, destructive.
Yeah. Plus the ongoing large losses and that really limited financial visibility we talked about, those factors just significantly outweigh the recent operational momentum right now.
They're just too big of red flags to ignore.
Yeah.
Pretty much. So the conclusion from the analysis is basically this. Due to the extreme volatility, the limited liquidity, and just the highly speculative nature of it all, Nvni Group is not suitable for traditional buy and hold long-term investing.
Okay.
Not for your retirement account, then.
Definitely not. It seems only appropriate maybe for very high-risk short-term trading strategies. People specifically trying to play the momentum around those catalyst events we discussed, like that upcoming September 30th announcement.
Right. So wrapping this up, what does this all mean for you, the listener? Well, you've got this high-growth story, the consolidation play in a potentially attractive market, LATAM SaaS. But it's paired with some critical financial opacity, things we just don't know, and absolutely wild price swings.
Yeah. And that upcoming September 30th earnings release and the investor webinar, it's going to be absolutely pivotal. If you're even thinking about trading this or just trying to understand where it's headed, you need to listen very closely for any clarity they provide on their cash situation, their runway.
Crucial information needed.
Definitely. And let's just leave you with maybe one final provocative thought to chew on. That single analyst, the one who put the $7 block target out there.
Yeah.
That target implies a belief in some kind of rapid, massive turnaround, or maybe a huge re-rating event
Yeah.
driven by, I don't know, spectacular success with synergies or landing a game-changing partnership.
Home run scenario.
Exactly. But for anything like that to happen, this company doesn't just need more revenue. It desperately needs to bridge that huge gap in transparency we've highlighted, and it needs to prove there's a clear near-term path away from losing nearly $14 million a year.
So the key question. So if you're considering this stock, you really have to ask yourself, do you believe management can actually deliver that level of clarity and tangible evidence of structural profitability on September 30th? Because if they can't, well, then the price is likely just going to revert back to being driven by that weak long-term technical trend and maybe more speculation.